Well, Theo, it's the end of a rather traumatic and dramatic year, 2022. We're recording our last monthly update, which I think we're going to change slightly to kind of the end of the year update and maybe towards the end of this look at the year ahead. So it's always interesting when you look back. We don't necessarily feel each month or each week of the month as dramatically as we would when we zoom out again. But maybe what's the context to 2022? How good or how bad was this year?
Look, Warren, hello. I think the key was from a volatility point of view. It was an extremely rough ride. If you look at just the Rand started the year around 16 to the dollar. It ended the year just weaker than 17, or there where we are now. But in the meantime, there's been a 4 Rand difference. At some point, we were closer to 14.50, and at some point, we were closer to 18.50. Yeah. That gives you a massive volatility throughout the year. If you then look at markets, at some point during this year, around September, October, if you look at the stock standard American balanced portfolio, that means a portfolio that has got a half, let's say 40% in the bond market and 50-60% in the equity market. That balanced portfolio, at some point during this year, it was down more than 25%. Just to put that into perspective, if you look since 1926 to now, there's only 3 years where that has been down. Where both, if you have bond allocation and equity allocation, where that diversification did not work for you, and that was this year. So this year is amongst 2 other years. There's 3 years in total where we had this kind of returns, and this is probably, at that point in time, was the worst return for the average American investor. And I'm not talking about the sophisticated equity investor, I'm talking about the American balanced portfolio investor. Well, the S&P at that point was down almost 30%. It's recovered half of that. So although it's still down, it's recovered half of that. This was also a year for an international investor where bonds did not protect you. The diversification of bonds did not protect you against equity volatility. So I think from a point of departure, an extreme volatile environment. But Warren, even in this volatility, this is not abnormal cycles. There's a normality into this cycle, and I think one must be very careful to see this as a massive permanent change. This is part and parcel of markets. You have this volatility, unfortunately, from time to time.
Yeah, I think that's maybe the context that a lot of people don't understand. Is the last big kind of market event that we've dealt with that was, let's say, imposed on us was COVID, and the one before that was the 2008 financial crisis. Both of those were relatively unusual events that we didn't know how to navigate. Anybody in the world didn't know how to navigate. We didn't know in 2008 that actually the financial system was at such risk that we could have got to the point where global financial markets froze. And maybe the system broke, which didn't happen, but it was very close. And then going through a pandemic, the first one in a century, how does one deal with a pandemic? What we're dealing with now is very normal. It's about inflation, it's about interest rates. So while we can't get the timing of something like this right, what we do know is when inflation has come through the system, once it starts to decline again, we know that interest rates will stop rising, they'll stay stagnant for a while, and then they'll start to go down. We know how to value that, we know how to anticipate what will happen. What we can't do is we can't say when it will happen. All of what we're dealing with right now is quite normal. And I think that that's the thing that's very comforting for us as investors is we don't like to see 26 or 30% drops in investment statements, and that's always going to be horrible to deal with. The message though is we know why it happened and we know why it will unwind again. And those are the important things to understand. When you're dealing with a pandemic, you know why it happened, but you actually don't really know how it's going to unwind and what's going to cause things to get better. So the context between 2020 and now, the differences are dramatic, and we're much more comfortable that we know how to navigate this. And I think for context, because we're used to inflation, because we're used to rising interest rates and falling interest rates, we're navigating this much better than, much more comfortably, for example, than an American or a British or a UK or a European fund manager who's over the or under the age of 45. They've never dealt with this before. So I think we're in a normal, horrible environment, but it's normal, and we know why it gets better, and we know that we do get through this. The system doesn't fall over because of this.
Yes, just think about this. If you a Dutch person living in Amsterdam, you've been used to for more than close to 2 decades of inflation at around about 1 or 2%. Now you hit with inflation 17, 18%. Just think of the reaction of that person. It's incredible, unsettling, and that, I come back to your point, there's a whole generation of fund managers, of bankers, of analysts that has never experienced inflation, that has never experienced real interest rates. And that needed to unwind throughout the system. But another issue, Warren, coming back to our local situation, there's a lot of media, and we'll probably see that picking up in December, early January, about South Africa being grey listed. Let's put that into context.
So just to give, neither you or I are lovers of compliance and the like, but just to give a little bit of context, this is about the developed world looking at money laundering legislation, and so firstly around legislation, and then secondly around the policing of money laundering. And what they're looking at is to say what countries are controlling the money laundering correctly, and what countries need to do better. And we are on the kind of on the list now. That's what the grey list is about, is to say your legislation needs to be improved, and your policing of that legislation, the implementation of that legislation needs to be improved. That's really what grey listing is about. Now, day to day for you and me and our clients who are investing, and especially investing globally, a lot of the countries that we do business with already have adjusted their kind of risk parameters around dealing with a South African. They're already saying that they've been doing it for quite some time. It's not a new thing that's happened in the last few weeks. It's happened over the last few years, where they would be saying, we need to check the source of funds, we need to check the source of wealth more clearly, in more depth than we've done in the past. So actually for us to, as private investors doing business overseas, a lot of the pain has already been taken. It will have a big impact in South Africa, where, for example, if you own a trust, you've probably already experienced it, where the banks are coming back to you to say, we need more information about your beneficiaries, about the trustees. We need to look deeper into who all the beneficiaries are of all of these things. So it's going to be about enhanced FICA is really the deal here, about more information that we need to provide the financial institutions. As an investor, that's painful and irritating. As a South African, it's very good news, because it makes it harder for the bad people to get away with money laundering. So I'm putting it on the horizon that I'm very confident we are going to be grey listed. I'm equally confident it's not the end of the world for us as South Africans. It won't prohibit us from doing business overseas. It's something we can resolve. It's something that the government is already taking action on. Private investment institutions already doing things to address the problems. And so we will get out of this again in the future. But don't look at this, if you're watching this and we do get grey listed, this is not the end of the world. This is not like being credit downgraded, where there's a permanent kind of naughty list that we don't ever recover from, or it takes decades to recover from.
I think Mauritius is a great example, where they got grey listed. Nothing massively happened in terms of people and the operation they do, but government enhanced, and financial institutions enhanced their procedures, their legislation, their compliance, and they got out of this. And I think that's what's going to happen with us as well. It might take a while, but we will work our way through the system.
So it's bad news. Let's not say it's good news, but it's not catastrophic news that causes the end of the world for us. It's just something we're going to have to deal with. I think just also staying on the local theme, December is usually a volatile time in our lives politically, because we get to these ANC elective conferences. So we've got a big one coming up towards the end of this year, and I want to kind of just ask you to go back to 5 years ago, which was rather a momentous one, and just to remind people of where we were 5 years ago after the last elective conference, and how this one might unfold.
Yes, I think 5 years ago there was a contestation, is a nice word that the ANC uses, between the RET faction, that means the support base for Jacob Zuma, and Cyril Ramaphosa's grouping, CR17 as they called it at that point in time. It was an incredibly close contestation, and it turned on a knife edge in the end. To such an extent that Ace Magashule, who was the Secretary General at this point in time, clearly stated that it was a mistake to appoint Cyril Ramaphosa, and that mistake will be rectified in 5 years' time. Well, we're 5 years on, and the RET faction is very light. It's almost nowhere. So from that point of view, the chances of Cyril not being voted in as president is extremely slim. I think his bigger risk is Pala Pala. And why I say that's the bigger risk, the bigger risk is if there is criminal charges brought against him between now and the policy conference, the stand aside role of the ANC will require him to stand aside. Will that happen or not? I don't think it will happen. I think the process is slow. I still think there's major issues that he'll need to answer. Hopefully that will not happen. If you just look back, remember 5 years ago, if I had said to you that in the first term of Cyril, we'll see Jacob Zuma in jail for a while, you wouldn't have believed me. Well, it happened. We'll see Ace Magashule almost disappeared from Lutuli House, not being Secretary General. It happened. We will see criminal charges against the previous heads of not only Eskom and Transnet, but even a previous the Commissioner of Police. That happened. We'll see the end of bailing out SAA. That happened. We'll see again the uptake of privatizing power supply. That happened. So the point is, just like it took us slowly and it took a number of years to us to understand the damage of the Zuma years, it'll take time for us to see to what extent we are seeing changes in the South African economy from a policy point of view. And then obviously the big focus will then slowly start to shift to a second-term president, which if you go back to the US, a second-term president has a lot more leeway to do what he or she wants. Just one thing, no ANC president has ever survived its whole term, a whole second term. It hasn't happened. I don't think it'll happen this time around, but we will slowly start to focus to the 2024 election. As to deputy president, in January, when Cyril will probably reshuffle his cabinet, chances are that he will also get rid of Didi Mabuza as deputy president and most likely put the ANC deputy president as the deputy president of the country. Remember, he decides his cabinet and he appoints his deputy president. So that's where that conference is. But Warren, we at the end of a very, very volatile, uncomfortable year. Your view if you look at 2023?
So we're in the business of not making predictions. So thankfully, what we can talk about is what's happened in the past has stood us in good stead from the point of view that the South African stock market is cheap. It's offering very good value. The developed markets around the world are offering very good value. And the inflation story is, the bulk of that story is behind us. It's not as if we've got another 2 years of inflation ahead of us globally with rising interest rates for another 2 years. The questions that analysts are starting to ask are, how many more months? Not how many more years of inflation before we see interest rates peaking and then turning. And so for me, that's a very positive sign that when that happens, and certainly we can't make that forecast, the world will start to go the right side up again. We understand how things work. It means that investors in shares who own shares now, whether it's in the JSE or globally, if you own kind of a broad basket of shares, you can be very confident that you will get at least the normal return of the stock market again. And normal returns are, kind of 10 to 15% a year, and we haven't really had that for quite some time. So without saying, we need lots of things to go right, the world is busy normalizing again, and just normalizing means that we get decent returns. And globally, that bonds become an asset class we can buy again. That's a very nice thing to see. In South Africa, once the kind of Eskom story is kind of through our lives, towards the end of 2023, we'll probably have a much better idea of how much power is actually really going to be added in 2024. At the moment, it's about, everyone's saying 18-24 months. Well, we'll be through a year by then. So I'm looking forward to that, looking forward to a bit of resolution around the criminals that are going to be going to jail by then. And then I think just, getting decent market growth and market recovery will be very rewarding for investors. We've had a lost decade in South Africa, a terrible couple of years globally, and I think we're probably looking forward to a much better year or two from 23 and 24. But it won't be smooth, it won't be without bumps, but I do think we can afford to be a little bit more optimistic than we've been for quite some time now. I think maybe on that note, Theo, from me to our clients, thank you very much for your patience, for your tolerance of terrible market returns. We appreciate you kind of staying the course with us, listening to our message, not to kind of cash out and panic. And we also appreciate that you didn't buy cryptocurrencies on a big size. It was a good call. I'm hoping it'll continue to be a good call. And maybe that the world is kind of normalizing again, and it's an environment that more of us understand.
Yeah, Warren, thank you very much. I agree with that. And then we're in the cusp of festive season. I think we all deserve that. We deserve a bit of a break. We deserve to look back at the difficult year, find some rest, and drive safely, stay safe, and hopefully next year it will be slightly smoother. I certainly hope that it will be less volatile than this year, but note that our portfolios are structured even for volatile markets. If it's great markets, it'll be a bonus. Warren, thank you very much.